Hello everyone, and welcome to our Market Alert video for today, which is March 28, 2025. Thank you for watching/listening. And we have a lot to get to. We're going to talk about the possibilities of a recession are increasing, and therefore the possibility of a bear market and a swoon in our investments is also increasing. So we're going to dive into what's driving that and what's going on right now. But before we do, let me introduce myself. I am Ken Moraif, and I'm the founder and CEO of Retirement Planners of America. And we have a singular goal, and that is to create as many SCWPS as we possibly can. And if you don't know what SCWPS is the acronym for Second Childhood Without Parental Supervision. So when our client retires, we call them a SCWPS, and we tell them to get out of here, go play, go have fun. Let us worry about all this boring financial stuff so that you don't have to. And so that's our goal. Our website is RPOA.com. I encourage you to go there and check out all our stuff. So let's talk about what's the data we got. We got a lot this week. And I want to start off with the tariffs, because on April 2nd, and we believe that a lot of the selling we're seeing now in the market is because up until now, it does not appear that investors even thought the tariffs would happen. It's kind of this weird where they're not pricing in the tariffs at all. But now April 2nd is like right around the corner, and suddenly it's like, whoa, it's real. And these are, significant tariffs, 25% on automobiles, and reciprocal tariffs on everybody. These are significant tariffs, and they could have significant impact. And that uncertainty, certainly in our view, is driving a lot of people who are saying, all right, I'm going to take my marbles and go home and take my winnings and go home. But there are some other things that are going on in addition to that. One is that the yield curve is inverted. So for those of you who don't know what the yield curve is, a yield curve is the difference between short-term interest rates and long-term interest rates. So if you're looking at the difference between those two, if long-term rates, what interest rates are going to be tomorrow, are down below where they are today, you have what's called an inverted yield curve. Now, why would people think that interest rates are going to be lower in the future than they are today? Well, usually because there's a recession and the Federal Reserve wants to lower interest rates to stimulate the economy. So the yield curve has actually predicted every single recession that we've ever had in our country. So that seems like if it's inverted, that means recession's coming, right? Well, not so fast. The problem with the yield curve is that it has also predicted a whole bunch of recessions that did not happen. Okay, so it's a very accurate indicator of recessions coming, but it's also predicting a bunch that didn't. So you can't hang your hat entirely on it. But if you look at it in a macro picture and you throw in yield curve saying, that's inverted, saying recession's coming, that could be important. The other thing that's really important is consumer confidence. So our consumers represent 70% of our economy. They're the ones that drive everything. And so therefore, if their confidence is down, that's not a good sign because they'll stop shopping. So consumer confidence is down to a 12-year low right now. And so that would give you pause. We got the yield curve, we got tariffs. And so if the consumer's confidence is way down, then maybe that's a bad thing and recession's coming. Well, the counter to that is that spending is up. So I think what's happening is that consumers are like, man, my confidence is down and I'm so depressed. Let's go shopping. So was it called shopping therapy or something like that? So they're shopping to overcome their lack of confidence. So who knows? Okay, consumers are impossible to predict. Now, the other thing that's also very important is that investor sentiment is moving into defensive postures. So what this means is that if you look at the broad stock market, right, there's thousands of stocks on the stock market. On one end, you've got all the stocks that are considered to be aggressive, right? You invest in those because you have a lot of confidence in the future, and you think that you want to take a risk because you think things are going to be real good. On the other end of the spectrum, you've got what are called defensive stocks, where you go into those because you think things are going to get bad, and so you want to be more defensive. Well, the trend right now has been on the more aggressive, but it's now moving more and more towards the more defensive. So the stock market is going more and more defensive. The bond market yield curve has inverted, meaning they're thinking recession's coming. Consumer confidence is down, but spending's up. So there's a bright spot there. So overall, kind of a storms on the horizon, storm clouds on the horizon picture. and so one that we're keeping an eye on for our clients. Now, we have a strategy we call Invest and Protect, which told us to sell in November of 2007 before the big stock market crash of '08, told us to sell literally the day before the pandemic was announced. And you guys know what happened next, right? They shut down the whole economy and the stock market, went down. So we want to protect our clients from big losses because we believe that that growth is important, but protection of principal is more important. If you want to retire or stay retired, we think it's super important to protect the money that's going to support you during that time, right? So that's why we have our Invest and Protect strategy. And as I record this, we have not triggered out. Our strategy has not told us to sell as of yet. So we are still fully invested as I record this. But that could change in a few days. So stay tuned to this space. You don't want to miss this video in case we made a move. And by the way, I can't give you advice. I just got to say this from my compliance department because I've never met you. I don't know how you're invested. So make sure you talk to one of our retirement planners before you do anything that we talk about on these videos and make sure it's appropriate for you. So there you have it. Kind of a scary time, actually, if you ask me. If we did not have our Invest and Protect strategy, I would be very worried for our clients. But we're close to getting out, so I sleep at night. So I hope this video finds you healthy, wealthy, and wise. I hope that you got something out of it. Please like and subscribe to this video. It would help us out tremendously. Share it with your friends. So again, thanks for watching, and we'll talk soon.
Retirement Planners of America, RPOA.com.